Hey everybody, Charlie Jewett here from the Renovating Retirement Podcast. And if you go search Renovating Retirement on Google, you'll find all kinds of good stuff. 4 years of podcasts, a bunch of videos I've created, webinars and things. And speaking of webinars, let's talk about the alternative investments webinars that I'm doing currently. I've been doing this for 16 years. It hasn't anything to do with COVID-19, but certainly during the COVID-19 sort of hiccups and what people saw in the market, it has created a little bit of a aha or kind of woken people up, so to speak. If the markets dropped, 36% or whatever they did, and then now they've had to recover, which really could be about the presidential election more so than how much business those 500 companies in the S&P 500 are actually doing. But I won't talk about that right now. I'll save that for the webinar. The alternative investments webinar that I do is me taking my research over the last 16 years and my experience doing over 2,000 financial plans at this point and saying, well, what's really working? And what we're seeing out there, if you look close enough, if you don't just listen to the joker brokers, if you don't just listen to the people that want to manage money and are kind of wishing that that would still work, if you look past that or use some of my materials, you'll find some shocking things. The market has completely changed from the days where our parents retired and took a 4% withdrawal rate, where people rebalanced and had a little bit less in stocks, a little bit more in bonds, and now they're safer, they're going to be okay. All of that was from the research last century. So from 1970 to 1999, the market, real rate of return, if you left your money there and let it go up and down, you didn't panic, if you left it in the market like they tell you to, during that 29-year period, 1970 to 1999, you actually compounded that money at 13.78% if you were just in the S&P 500. Now, I'm ignoring fees and things like that if you have a money manager. But if you just bought the S&P 500, that's almost 14% compounding for 29 years. That's awesome. That definitely is beating annuities, land, life insurance, REITs, day trading, starting your own business. It was beating a lot of things at that point, and that's where the market gained its popularity with this generation. And people said, oh, if you want to make 8 to 10, you can leave it in the market. The problem is, we started this century with the dot-com bubble. So the 90s was a little bit weird. And then we saw a correction because dogdo.com really wasn't worth, $100 a share or whatever it was. Pictures of dogs going to the bathroom and sending bags of it to your friends. That really was not a legitimate business. It was something that blew up when every .com was blowing up. We saw a correction in 2000, 2001. Then we saw another correction, the mortgage meltdown in 2008 and 9, and created this thing called the lost decade. Well, the lost decade has completely changed the entire world of investing. And now that we include that in our rate of return and income projections and things like that, where we've ended up is the last 19 years, from 2000 to the end of 2019, the market had only grown at a compound 6.01. To give you an idea how different 6.01 and the difference between 6% and 14%, basically what the market did for 29 years from 1970 to 1999, then what it did from 2000 to 2019. If you put $100,000 into something that was compounding at 14%, you end up with an exorbitant amount of money at the end. I'm going to switch off the screen for a moment. I think you can still see me, which is fine. I want to make sure I get my math accurate. At 14%, if you gave them $100,000, market compound at 14% for 30 years, you have about $5 million. At only 6%, you don't have 5 million. You don't have half of that, 3 million. You don't have 1 million. You have $575,000. So we've got this situation with compound interest where the market was worth the risk, more reward. It created Edward Jones, Merrill Lynch, Morgan Stanley, all these companies that are easy to find and have trillions under management, if you listen to what they say. But the market changed, and it's not compounding the way it used to. So one of the things we're going to talk about in this webinar is, what do you do? What if the market didn't exist? I created the stockless portfolio many, many years ago when I started to see what was happening in the market and that the more conservative tools were beating the market. Now, you don't have to be conservative to beat the market. Let's talk a little bit about land and land banking. Investing in land and real estate goes back way further than even having the stock market, and they truly are not making more land, where every year new companies show up. I think there's 18 million companies that are factored into the Inc. 5000, which the land company that I use has been Inc. 5000 twice. I think once was in the top 2,600 of the 18 million small businesses that are out there. So land is interesting because it doesn't go down in value. We are not seeing, when you buy land in the path of growth, places where Walmart and McDonald's are scrambling to get in and fighting each other. We don't find that land has ever gone down, certainly not in the 12 to 15 years that we've been focusing on one area. So we'll certainly be talking about land. Why is that? Because what are stocks, bonds, and mutual funds supposed to be? Buy them and hold them. Hold on to it, over time. It's worth the ups and downs. It's going to grow really nicely. And people shoot for, 8, 10, 12. Well, land over a 17-year period was 24%. That ended in 2012. And in this particular area, it seems like it's gone up since then. Well, even if we can make 14, 15, 16, which would be incredible, it's kind of doing what the market used to do. So it's the new market, so to speak, the new buy and hold. It's doing it better, and it does it without the ups and downs and without having to pay your broker a fee. So we save that 1% fee. You don't need somebody to gamble for you and tell you which land to buy and reallocate. You just buy it, hold it, and wait for somebody to buy it from you. And that process over 6,000 transactions has been making 20, 30% for people, which is awesome. The creator of the 401k says it has become a monster. It's a failed strategy. Tony Robbins, in his book, Money, Master the Game, talks about how inside of 401ks, the fees are obnoxiously high and you have limited choices in the market. When we talk about taxes, and I say to anybody, do you think taxes are going up or down? They say up. Country's in trouble, can't afford Social Security, can't afford Medicare. Okay, you think taxes are going up and you want to be in the same tax bracket, have kind of a nice lifestyle when you retire, or are you going to be poor? They go, no, we kind of want a nice lifestyle, the same or better. I'm like, okay, if you think taxes are going to be higher later, why are you funding your 401k and your IRA and your 403b, 457, your defined benefit? Why are you funding pre-tax investments to get a deduction today when you think taxes are low so you can pay it later when you think taxes are high? And they're just like that. I just look at them. They go, I don't know. This is what my tax guy told me to do and what my advisor told me to do. I know that's what they tell you to do. That's why I started Renovating Retirement in 2016, said this industry needs a spanking because they're given terrible advice because it's easy to understand and popular, but it's wrong. If you think taxes are going to go up, we need to create tax-free income, not postpone taxes to a later date. If you're putting money in 401ks, sometimes even the match doesn't make sense. Even if your employer is giving you 100 cents on the dollar match, sometimes still I don't do it for myself, or I have other people not do that. The market has changed. The 401k has failed. There's a ton of new stuff in the world. In the past, our parents didn't have arrangements with insurance companies, kind of retirement income insurance or personal pensions, where they say, well, give us the money. We'll invest it safely for you. But if it doesn't go well, if you run out of money, we'll still pay you your guaranteed pension for the rest of your life. Even if your account hits zero, you can still have, $5,000, $6,000 a month. And guess what? It goes up every couple of years if the index we're tracking goes up. How's that sound? That you can't run out of money anymore if you hire if you use the right products. Are you kidding me? Never, ever run out of retirement income, even if you run out of money. The one thing we don't know what's going to happen, the market, how it's going to perform. Why would I base my retirement income on something that may not do well, and therefore I could run out or have to lower my income when I could just guarantee it, lock it in place, easy peasy, and it's a higher income than I could take from a stock portfolio anyway. Amen. Land, tax-free retirement planning, retirement plans with no opportunity cost. If you have $1 million in there and you take $50,000 out for income, every other account goes down to $950. The new accounts, the most modern accounts, stay at $1 million, and you continue to earn interest on $1 million, and it compounds no matter how much money you've taken out. If you've taken $1 million out 20 years later, you still have multiple millions of dollars working for you. Wait, what? How could that be possible? I know. How could that be possible? But it exists, and it's not in the stock market, and it's not at the bank. So you have to learn the new and improve. See, when the best top of the line refrigerator comes out, or washing machine, or dishwasher, whatever top of the line Tesla, when the new one comes out, if you could replace the old one with the new one without any cost, many people would do that. And what you'll find in the financial services is this is the only industry where we can actually do that. We can bring you up to the most modern, up-to-date tools, and it doesn't cost you anything. It's like a no-cost refinance. You have to pay somebody to remodel your kitchen. You don't have to pay anybody to remodel your finances. You just always keep the best stuff, and that's our job. Income tools, guaranteed income. Wait till you see, guaranteed tax-free increasing income is the holy grail of retirement planning. And I can do that in my sleep. I'm going to teach you that. We talked about taxes. How about this as the last thing? I mentioned 401ks, and I used to teach that, just invest in the 401k up to the match. If they're giving you 100 cents on the dollar for the first 5% of your income, go ahead and do that. It's still a sound strategy. It's just some of the tools today, some of the newer tools are worth giving up the match for. One example is, are you aware that there's a 2.5% match now? Wait, what? A 2.5% match? There's a 2.5% match. There are companies, just like, tons of banks will lend you money to mortgage a house, buy a house you can't afford, basically. You couldn't pay cash for it, but you'd like to live there and let it appreciate and benefit from that. So you mortgage it, you pay somebody 3, 4, 5% interest. Just like that's a really intelligent, wise thing to do. There are companies that will mortgage or leverage your retirement for you. They'll give you the money up front. By the way, all investing works better if you have the money up front and then pay slowly for it instead of slow paying it at $500 a month or whatever. They'll give you the money up front and you pay interest. They're basically lending you money to fund your retirement. So you're like, wow, could I get a couple $100,000 in my retirement account over the next couple of years? No, I couldn't. Somebody will lend me money to do it and charge me really low interest, half of what I'm earning. Can I do it now? Yes, you can do it now. You can afford a home you can't afford because of a mortgage. You can afford the retirement or the life of your dreams that you can't afford because of financing for retirement accounts. So the way it stands today, it's about 2.5 times the money you put in. If you're putting in $100,000 over 5 years, they're going to dump in another $250,000 for you, let you use it for 15 years, pay themselves back with tiny interest, and all of the money. By the way, this combines with what I just taught you about the opportunity cost. If they pay themselves back $500,000 or $600,000, you will still have an extra $500,000 or $600,000 inside your account, earning interest, no matter how much money you ever take out for the rest of your life. What? If you like cutting edge strategy, you like to think outside the box, you're not rigidly addicted to the stock market, but more, you're addicted to what works, the latest and greatest, the most sound financial advice on the planet, whether it be traditional or not. If that's you, you will love the Alternative Investments webinar where we cover whichever ones I feel like covering, but generally speaking, it's always going to be land banking, how to make 20, 30% in land safer than the stock market with much less fees. You can do it in a 529, almost any account, your children's accounts, your IRA accounts, SEP accounts, Roth accounts, Roth. You can do it with an HSA, which is crazy. So we're going to cover land. We're going to cover personal guaranteed income, personal pensions, because pensions are the number one most joyful type of money in the world, a paycheck that comes and is never going to stop no matter what the market does. Or if you run out of money, you still get paid to live the life of your dreams. Heck yeah, I like that. So we're going to cover that. And we're always going to be covering the newest, the latest, and the greatest. And then we never speak without covering tax-free retirement income, the fact that taxes are looking like they have to go up. And so let's get you in a 0% tax bracket. Nobody does it better than our group. And I have put that to the test. I have put that to the test. Nobody gives a better retirement plan than us right now. So I will see you there on the webinar. Charlie Jewett with the Renovating Retirement Podcast. Cannot wait. This is my passion. I cannot wait to educate you and help you and give you some epiphanies and open your eyes and provide that windshield that lets you be the genius you are. When you see clearly, you make absolutely intelligent decisions. We're just going to help you see really, really clearly. I will see you there.